The tech bubble debate, a stormy start to November. In the world of finance, the month of November often brings a sense of optimism, with historical data suggesting it's a period of growth for the S&P 500. However, this year, the first week has been a dampener, with stocks facing a chilly reception. The S&P 500 and Dow Jones Industrial Average both experienced losses of over 1%, while the Nasdaq Composite took a significant hit, shedding around 3%, its largest weekly loss since April. So, what's causing this sudden dip? The AI valuation conundrum. It seems that fears surrounding the valuation of artificial intelligence-related stocks are taking center stage. Tan Su-shan, CEO of DBS, Southeast Asia's largest bank, warns that with such a concentrated investment in a few key stocks, worries about a potential bubble burst are inevitable. This sentiment is shared by David Solomon, CEO of Goldman Sachs, who predicts a possible 10 to 20% drawdown in equity markets within the next year. But here's where it gets controversial. Not everyone sees this pullback as a bad thing. Glen Smith, Chief Investment Officer at GDS Wealth Management, suggests that a dip could present buying opportunities for investors. Kiran Ganesh, multi-asset strategist at UBS, adds that despite concerns over tech stock valuations, earnings have been reassuring, which could indicate that this rainy period might not last forever. Market updates and insights. Major U.S. indices had a mixed performance on Friday, with the S&P 500 and Dow Jones Industrial Average inching up, while the Nasdaq Composite closed lower. The Pan-European Stoxx 600 also saw losses. Positive news from China, as consumer prices picked up in October, beating analysts' expectations. The U.S. government is on track to end its shutdown, with enough Democratic senators agreeing to vote for a funding deal. Unfortunately, the ongoing shutdown has resulted in another missed jobs report, leaving economists to speculate on what the data might have shown. For investors, there's a silver lining. Several stocks identified by CNBC Pro's stock screener tool are considered oversold, potentially indicating a recovery in prices. And this is the part most people miss. In the world of high finance, there's a rising concern about family office imposters. With the global wealth boom, fundraisers and fraudsters are posing as family office representatives, preying on unsuspecting investors. Industry veterans reveal that some imposters are even motivated by an ego boost, taking advantage of the information vacuum created by the privacy norms surrounding genuine single-family offices. So, as we navigate these market waters, it's crucial to stay informed and vigilant. The debate over the tech bubble and AI valuations is far from over, and with potential opportunities lurking, it's an exciting time for investors. What are your thoughts on the matter? Feel free to share your insights and opinions in the comments below.